Have you ever picked up a financial document and felt like you were trying to read a completely different language? Well, today, that's exactly what we're going to tackle. We're taking a real new fund offer document and, translating it. We're going to turn all that confusing jargon into simple, clear ideas so you know exactly what you're looking at. Let's dive in. You've probably seen that acronym, NFO, pop up whenever a new mutual fund is about to launch. It's everywhere. But what does it actually mean? More importantly, what does it mean for you as a potential investor? Let's break it down.
So think of it like this. An NFO is basically an IPO, but for a mutual fund. It's the very first chance for anyone to buy into a brand new fund, and it's usually at a fixed price, like 10 rupees for one unit. After this special NFO window closes, that price starts to move up and down with the market.
Okay, to make this super practical, we're not just going to talk theory. We're going to use the official document, the Key Information Memorandum for the Parag Parikh Large Cap Fund as our case study. Now, I have to be crystal clear here. This is not a recommendation or an endorsement. We are simply using this document to learn how to read the map for any fund out there. So the very first question we need to answer is, what is this thing? Every fund document starts by explaining its core identity. It answers that really basic question, what kind of investment product am I actually looking at? And bam, right on the first page, we get our answer. Let's unpack this sentence. Open-ended just means you can buy or sell your units pretty much anytime you want after that initial NFO period is over. Equity scheme tells us it's all about stocks, and large cap stocks, well, that tells us the specific kind of stocks it's going after. So what in the world are large cap companies? Well, according to the regulator, SEBI, we're talking about the big ones, the absolute giants. These are the 100 biggest publicly traded companies in India, measured by their total market value. Okay, so now we know what it is. The next logical question is, why? Why does this fund even exist? What is it trying to accomplish with an investor's money? This is its mission statement. And here we have it, pulled straight from the document itself. The two keywords here are absolutely crucial: long-term and capital appreciation. This tells you right away that this fund is not designed for a quick flip. It's about trying to grow the value of your initial investment over a really long time. So putting that into plain English, it tells us exactly who this product is built for. It's for an investor who has a long time horizon, who's focused on creating wealth, and who understands that the stock market has its ups and downs along the way. A goal is great, right? But a plan is even better. So how is the fund manager actually going to try and achieve this long-term growth? Let's take a look at the strategy. And this is where the rules of the game are laid out. The document is super clear about this. This chart shows us that the fund has to invest at least 80% of its money in those large cap stocks we talked about. That's its main job. The other 20%, well, that gives the manager a little bit of wiggle room to invest in other things. So what does that wiggle room or flexibility actually mean? Well, while the main course is always going to be those big Indian company stocks, the fund can also sprinkle in other things. This could be shares of smaller companies, maybe some international stocks, or even lower risk stuff like bonds to add a bit of stability to the mix. All right, pay attention, because this is, in my opinion, the most important section of any fund document you'll ever read. We've talked about the fun stuff, the goals, the strategy, but now we have to talk about the risks and the costs. This is the fine print you absolutely cannot afford to skip. The document does not beat around the bush. It's required to have this thing called a riskometer, and for this fund, that needle is pointing all the way over to very high risk. And that makes sense, right? It's an equity fund, it's investing in stocks, and we all know that the value of stocks can go down just as easily as they can go up. This slide right here highlights the most fundamental rule of investing. The fund has a goal, but it is absolutely not a guarantee. The document says it right there in black and white. There are no guaranteed returns, and it's even possible to lose your initial investment. That's the trade-off you make for the potential of higher rewards. Now, every fund has costs to run it, and those costs are paid by you, the investor. This is called the total expense ratio, or TER. For this particular fund, the maximum they can charge you each year is 2.25% of your investment value. This fee gets taken out automatically, so it's a direct impact on your returns year in and year out. So after all that, what does it actually take to get in the door? Well, the good news is the barrier to entry is pretty low. The document specifies a minimum of just 1,000 rupees, and that's whether you're making a one-time investment or starting a monthly systematic investment plan, what we all know as an SIP. And for this specific NFO, here's the timeline. It opens up for new subscriptions on January 19th. That special window then closes on January 30th. After that, the fund gets everything set up, and it reopens for normal, everyday buying and selling on February 6th. Okay, let's boil all of that down. Let's recap. What is it? It's an open-ended fund for India's top 100 companies. Why does it exist? To aim for long-term growth. How does it do it? By putting at least 80% into those big companies. What are the risks? It's rated very high risk, and there are zero guarantees. And the rules? It'll cost you up to 2.25% a year, and you can get started with just 1,000 rupees. Simple as that. So there you have it. We've just taken a pretty complex financial document and broken it down into its most essential pieces. You now have a framework, the what, the why, the how, the risks, and the rules that you can use to analyze any fund that comes your way. The map is officially in your hands. The only question left is, where do you want to go?